afternoon, everybody. It's Greg Schnell, and I am here with the weekend edition for March the 30th, 2019. That is just crazy that a quarter of the year's already gone by. It is so quick. So I think this is the way I look at the markets. Difficult week ahead, and I'll explain that in a second, but lower highs and lower lows, but close near the highs pretty much around the world. Industrial metals, real chart madness. It's just a real coin flip which way that's going to go. Copper had a lower high and a lower low this week, but closed near the top of the bar. PMs really had a terrible week with a big outside bearish reversal bar on gold. And that chart looks breaking down. Gold can lead commodities, so that one's a bit of a problem for me. Bonds, I mean, they've just been pointing straight down, so due for a bounce, maybe, but I wouldn't try to trade the other side of that yet. I still say hold your breath and keep stops in place. I know some people are still bullish. The NASDAQ made a lower high and a lower low, but closed near the highs. So the question is, which way is it going to go? I just think the rest of the world seems to be on track to kind of break down before the US, and that's what I'm worried about. And the Nikkei charts just continue to shock me. So that's what we're going to get into here. Let's start on the, where did it go? I lost my chart. Sorry about that. I must have closed it when I did that. Okay, just need this one more time. There we go. Okay, so quickly, let's just go through the breadth indicator. So here's our NASDAQ, and we don't know which way this is going to break. It looks like it wants to break to the upside. Just keep watching it. It's quite low in terms of actual momentum, so I'm a little worried about that. That's not a big deal on this chart. The NASDAQ high-lows drifted below zero here, which isn't that bullish. So a little bit worried about that, but they continue to trade in this sideways channel. But again, two dips below zero in March and now right back in the middle of the range. So that is not great. Again, we climbed in July and August during that period, but again, we're very close here to starting to dip negative. So next week, again, if it doesn't start climbing pretty quick, we're really going to have trouble. We are heading into earnings season, so that's another thing to watch. And that can be a critical one for us. So let's keep our eyes there. The NASDAQ, or the New York Composite, is interesting because it just keeps trading around this 12.6 level and can't make up its mind either way. 50% above or below. It broke the upsloping trend line. So is it breaking down? Doesn't seem like it yet, but this is the kind of moving average of the advanced decline, and you can see it's not quite as bullish as we'd like it to be, so that makes it more difficult. The next thing we want to talk about, obviously, is the high lows after we do the advanced decline. So what we see here for the New York, and again, let me just see if I have the next one that no, I don't. Okay, let me just do this DJ and just see if that pops up. Okay. So this is the New York composite high lows from Dow Jones, and they're updated on Friday night. So anyway, it's an interesting one to be aware of. Anyway, this one is sitting here right at 113, and you could just see this is kind of how we were all through February, March, April, and then we were jogging higher, and then in September we just started to break right down. We don't have any below zero yet, so that looks a little more bullish. Looking at, what did I do there? Somehow I got back to where I started. Here's the Canadian market, and this one is starting to actually dribble into negative territory, and this one looks to me like it wants to roll over. And on the high lows, we're back towards the zero level. And again, we can rally in Canada just between 0 and 50, but not by much. And you'll see here, this was a really nice run up. And then we were starting to dip in June. We started to dip into negative territory. And when we did that, that pretty much marked the lows. So, or marked the start of the decline. We ended up making a slightly higher high, and then down we went. So I think Canada is the weak one to watch, and again, I would expect it to break down before the U.S. market. McClellan Oscillator rallied back above zero here for the first time in a higher low, so perhaps it's ready to break out to the upside. When we look back in 2016, this is the sort of McClellan Oscillator we saw, which was much more bullish than my current interpretation of the markets. But again, my feeling isn't the U.S. markets. My feeling is the global markets are going to pull the U.S. markets down. So the summation index is still dripping lower, not terribly lower, but the NASI continued to drop, the new NASDAQ summation index. And so just, continuing to watch it. And again, we're still trading inside the range of 2018. So we haven't got a clear breakout one way or the other. Bullish percent index, this is interesting. It's starting to drip lower here, even as the composite goes higher. And we've only got 40% of the stocks on a buy signal. Now, back in 2015, this is where things rolled over. Back in 2007, 2008, this is where things rolled over. So as much as I want to be bullish, these charts are right at a risky point. So 2015... in 2007. And then when we go to the NASDAQ 100, these charts look stronger. So this is 07. We were up around this level, which we're at right now. But 08, we were much lower. But in 2015, we got all the way up here and then just gave it all back. So if you could tell me which way we're going to go, that would be great. What we see here is only 60% of the NASDAQ 100 are above their 200-day moving average. And what surprises me is over the last 6 weeks, even though the NASDAQ has been climbing, we still haven't been able to push to more stocks getting above their 200. Looking at the New York Composite, this one is a really good sensitive indicator. It's the one that made lower highs in September and kind of told us that something might be amiss, whereas it was running up all through 2017. So watching this one quite closely, you can see the market here is right up in the top right-hand corner, trying to break out of this pattern, and whether it has the strength to do that, that's what we're about to find out. It has dropped from 63% of the stock on a buy signal down to 55 as we're pushing to higher highs. And you can see back in 2018, this is kind of the level that we topped out before we rolled over. In 2008, this is kind of the level we topped out. In 2007, we actually topped out a little higher than this. And in 2015, at the actual market top was 65%, and on the rally was at 55%. Where are we now? We're at 55%. So here's 53% in terms of the percentage of stocks above the 200-day. And in May of 2015, we were at the market top, we were up around 65%, and on the bounce, we only got up to 30. Back in 08, we got all the way up to, you guessed it, this level we're at right now. So 55% on the bullish percent index and 50% on the percentage of stocks above the 200-day moving average. So couldn't be a finer borderline to hang on. So both the broader markets, the NASDAQ and the NASDAQ composite and the New York composite both sit right at the kind of levels. And again, I think it's the rest of the world that drags us down, not this world. So I'm not expecting the S&P 500 to be the first thing to break. I'm expecting it to be the last. It's sitting right around 69%. That's plenty bullish. In 2008, that was kind of the level we got to. Sure enough, where did we get to for the highs? Right up around 65%. Where did we get to right now? Right around 65%. We're sitting at 60. Just can't seem to get above that. And in 2015, we broke down from this sort of level. I haven't moved this. This green line was sitting here, but those red arrows were put there a long time ago, and you could just see this. This is a pretty critical level all the way across the chart. So anyway, that's why I think it's a pretty important week. If we can finally surge higher and get things going, that would be great. If we're stuck in the weeds here, this is a really critical place to start losing momentum. For Canada on the bullish percent index, we've got this downward drip going. We're right at this 56% level, and you could just see, all through 2007, 2008, we couldn't get above it. On the rally in 2015, we didn't get this high and fell back down. So, do we have the power? And here we are up at the 60% level, and again, 2015, we didn't get anywhere near this. So this one looks a little bit better, but I'm still trying to figure out what stocks started to rise last week, because the TSX really didn't have that good a week. It was pretty much sideways to down. The bullish percent index for energy, just to cover it off quickly, that's right in the middle here. It's just sitting at 50%. Crude has been gently climbing up towards $60, but all these other charts aren't moving. XLE, XOP, and the oil services index are just flat to sideways. Nobody seems to want to agree with the price of oil, so that bothers me. I think they're going lower. Bullish percent index for gold. Gold is now below its 50-day moving average, so I think that's a problem. Only 45% of the stocks are on the buy signal. On the uptrend on the GDX, we're going to find out if this breaks this week, but I expect it to. And GDX GLD ratio started to turn back down again after a false breakout. So all of these things add up to me being more cautious on gold. Okay, S&P 500, we broke the trend line late last week, and then this week we've just kind of muddled our way sideways. Again, we made a lower high and a lower low, but we closed near the top end of the bar, and I'll show you that on some weekly charts in a second. The NASDAQ is sitting right on its uptrend line, so I think if the NASDAQ has any kind of a dip below 7,200 or down there, that's probably when we start to decline. For the Fed meetings, you can see we haven't done anything since the Fed meeting, gone sideways at best. And here's the monthly performance, up 2% roughly, with most of that being in the last couple of days, so that was good. Year-to-date performance, again, we've broken the uptrend line, but we're hovering right in this area, 13% year-to-date. Weekly outside bars. So here's the problem. So we made lower lows and lower highs, but we had a false breakout last week where we tried to get above this big level and couldn't. This week we had our highest close above that level, but still haven't been able to kind of decisively break out. So that's why I think it's important. The NASDAQ did the same thing, had a failed breakout last week, made a lower high, lower low this week, and closed near the top of the bar, and actually had the highest close going back. So since October, so it's still, which way is this going to go? But lower highs and lower lows don't usually equate to an uptrend. So this is the first one on a weekly bar. We had a big outside bar 3 weeks ago, a rise up, then a failed breakout, and now a lower high and a lower low after that failed breakout. So it's cautionary. Russell's on its 5th week of declines here with lower highs, lower lows, and again, we don't have an answer. And there was one of these bars in the middle here, which was indecision, so we made a lower high but a higher low, and then we reversed it and continued down. So if that's what we get this week, I think we're pretty much on our way down. And I just don't know if we're going to have that in the US or not. NASDAQ distribution days, no real data here. We were starting to get quite a few of them towards early March, and then only one last week and one this week. So no real information there. PPO is drifting lower while the price is drifting higher. So usually that negative divergence eventually shows up. We'll just see if the market's got more rally time again back in June, July, August. It just wandered sideways in through here for months and eventually just kind of rolled over. But this uptrend on the NASDAQ, when it started to break, that was a pretty good clue. Okay, NASDAQ again just testing this 1-year resistance level. We still have room on the PPO to climb a little bit higher to get to that downtrend line before it would roll over, but on balance volume and accumulation distribution are still fine. They look positive. The monthly chart for the New York Composite is quite interesting, and the reason I say that is it didn't change much this month. It was up slightly, and we'll see it on the next chart. And again, lower highs and lower lows in place here. We did have a doji. Look at over here in 2015. What we ended up getting was this doji after it tried to break out and couldn't. And then that was our final rollover. And this was an area we tested multiple times. So here we are getting back up to an area we've tested, call it 12.8, and briefly went above it and then failed below it. So I think this 12.8 is going to be an important turning point for the for the New York Composite. And again, we didn't make any real headway, and we actually closed lower than we opened, but we closed higher than last month. So anyway, PPO, we still have downward momentum on a monthly chart. That's not that bullish, but we did get an improvement. The monthly moving average started to turn back up again like it did in here. So this would suggest not to be too bearish, Greg, but maybe I'm not taking that hint yet. We'll see. Here's the Russell. It's continuing to roll over. PPO is below zero, declining histogram. It's got me worried. Russell continues to defend this 1500 or 1475 level, and this looks pretty important. Again, rolling over under the 40-week moving average is kind of critical. So just be cautious here. I definitely think the market's 50% up or 50% down. It definitely doesn't feel like a big bull market next week to me. And I'd be happy to be wrong and start to see this whole thing start to push to the upside. IWM, again, same issues here. Relative strength, we did not drop to a new low, but it sure looked like we were going to. So we made a 2-year low when the market started to break down last fall. And then here the Russell's been underperforming, and on this week it was briefly up again, but like I say, lower high and lower low. So nothing really helpful there. Toronto. So we've had negative divergence on the daily chart going back for about a month now, where we were making higher highs and then making lower highs and momentum. You can see that this looks to me pretty much a little topping pattern here, where we're up, test the high, fail, come down, try to rally, can't get much more than the previous high, and then we start to drop away. So I get the feeling the TSX is on its way lower. We're struggling to get through this major resistance level, and PPO is rolling over pretty much right where we would expect it, right on this trend line of momentum. Shanghai Composite had a lower high, lower low, but closed again near the high end of the bar and closed down slightly on the week. Nothing really too concerning, down 0.5%. Okay, for the Nikkei, what I'm worried about is we're making new relative strength lows here. We're definitely trying to defend this 21,000. Looking at these rollovers, this is what continues to worry me. We're below the 200-day moving average. We continue to make little lower highs and lower lows. But I don't want to see this big line break. I think that's probably one of the bigger concerns that we could have. And if we had that, that would be a very big deal to me. So watching the Nikkei extremely close, this is the one that bothers me a lot. Okay, US dollar. So what we see here on the US dollar, we had another up week this week, and it just keeps turning back and forth. So we don't really get a good feel of which way this market wants to go. But the big issue, again, Brexit looks like it's going to resolve the wrong way, or not the wrong way, but for the British pound, it looks like it's going to fall here. And the euro looks weak again, but if the US dollar was up, the euro would look weak. So I would just say the currencies have put us back on the fence with this rise in the US dollar. And again, this 97.50 level up here, big rally in the last 7 days or so. Straight up, and so once we get up to the top of that range, we'll have to see if we've got the power to get through. And there we are, sideways chop, again going all the way back to early October when the market started to break down. And so the S&P was breaking down, but the dollar was climbing here above this previous range. And now, I think if we start to break out to the upside, we probably put more stress on emerging markets, and we'll start to see that this is more difficult. The PPO trend line going back for almost a whole year, if this starts to break out to the upside here, that would kind of confirm that the US dollar is ready to rock. XEU on a weekly basis, what we see here, this is the euro, and again, had a failed breakout last week and closed near the lows, so a big selling tail on the top, and then this week tried a little higher, so lower highs, lower lows, and closed near the low of the bar. We'll zoom in on it a little bit, but it looks to me like it wants to break down, not up. And the PPO looks like it's ready to roll over on this weekly chart. We can zoom in a little here just to lock in a little less time and get a little more clarity, but you can just see it's been trying to hold this level and just doesn't seem to be able to do that. Looking in on the euro here on this daily chart, again, horizontal resistance just barely hanging on, trying to hold this 112. The PPO is trying to hold this uptrend, but it just keeps getting tested. So we broke down this week. Again, it could reverse next week. Look at these staggered bars, just lower highs, lower lows almost every time. And it basically just breaks out and then swings the other way, just breaks down, swings the other way, just breaks down. So we'll see if we get more jerkiness, staccato. But to me, it just says when we continually test this line, eventually we start to actually fail. So that's what I think is going to happen here. And looking at the euro, going back on this daily chart, just squeezed in for a closer up view. The one thing I keep watching is what's going to happen to the German DAX. And again, it has to get through this 12,000 level and hasn't been able to do that. Yeah, it's just a really important level. Now we've got this back trend, and it looks like we're trying to back test the breakout and see if we can go higher. Maybe we can, and that would be positive, obviously. The Swedish krona that I like to keep track of just to help me with direction on the euro has broke down, never got back above the breakdown level, and looks like it wants to roll over. So that's another reason I think the euro starts to go lower. XBP, British pound, right up against this 65-week moving average. Hasn't been able to break through. Lots of overlapping bars, inside bars, outside bars. This week was slightly lower low and slightly lower high with close near the low. But you can see this uptrend is starting to come into threat here, and that goes back to the December low. And so once we get all of this Brexit stuff figured out, which is starting to enter the timeline, we were supposed to have it figured out by now, and I think the next deadline's April 12th or something. But we've got this uptrend, and if that starts to fail, I think the British pound is another one that rolls over. And look at the PPO rolling over right at zero. That would be quite bearish, and you could probably get on the pound down train. The British pound on the daily chart, you can just see this chop going sideways. It's been trying to work through this Brexit. We do have negative divergence on multiple highs here. So we had 2 higher highs and 2 lower highs on momentum. So I think this is planning on a lower outcome. Japanese yen, big push last week from a narrowing kind of pattern, a pennant pattern almost, and then breaks out to the upside, immediately reverses and fails, so puts in a higher high, higher low, but closes near the low. Momentum is rolling over, couldn't get back above the signal line, right at zero. This chart is so fragile here. So anyway, don't take your eyes off the yen. I think if the yen starts failing, somehow I don't get the feeling that the Nikkei is going to surge, and the Nikkei was actually down this week with the yen being down, which is usually quite odd. Anyway, so 2 inside bars within 3 weeks on the yen. There's so many reasons over there on that one that I'm watching closely. Okay, and here's the uptrend that we had going since December, and we dipped below and then tried to rally, much like the S&P, and now we're testing this 21,000 level. They keep defending it, they being the central bank, which is fine. But if this starts to break down, I think this is a real meaningful test of a double topping pattern, and couldn't get any momentum, and it starts to walk down hard. This is our 65-day moving average, and you can see we tried to break through and failed. So lots of reasons to be concerned on that one. And here's the S&P 500, and we're sitting right at this level after testing this prior high. So, all of these things are combining for me to be a week of cross currents, and we'll just see what we get. Canadian dollar pushed up, lower high, lower low, but closed near the top of the bar. This PPO, is it ready to turn up? It did break the downsloping trend line, but it's still below zero. And now I get the feeling that crude oil is going to break down, which would probably send the dollar lower. So if the Canadian dollar is going lower, the yen's going lower, the euro's lower, and the pound lower, I think the US dollar actually does finally break out. Here's the Aussie, and on the Aussie, what you see here is this big downtrend narrowing wedge for the last 6 months, and it just couldn't get any tighter. We'll find out which way it wants to break. There is an uptrend in momentum here, but we've come down. We've kind of got flat mo. We haven't accelerated off the bounce like we did back in December. So this one is also concerning, and again, if this starts to roll down, I'd be more concerned. This chart up here is of copper, and you can see just that we kind of had some bottoms in here on this range. It would be the scale on the left around $3, and so we're going to try and get back up to that level and see what happens. Junk. This one's really interesting because this is starting to say we're very close to new 52-week highs, and new 52-week highs is a pretty bullish thing, I would think. So I'm continuing to watch that just to see if it's got the momentum, and this is unadjusted, meaning we've taken out the high yield or the yield payments. But if this rolls over just above zero, and you can see the PPO has been flat for about 6 weeks, typically that's well, it says the uptrend is still intact. The PPO, the signal line is well below here. What we'd be watching for is for this to start to contract like it did back in here. And again, it rolled over in September and stayed high for a long time. Now the question is, do we get up that high? Anyway, it looks very bullish to me, and it looks like it wants to go higher, which should suggest everything's fine. Here's the 7 to 10 year treasury, and this thing is just breaking out from a big 5-year downtrend, so I expect it to go a lot higher, but just a couple of days it seems like it's very overbought, and it wouldn't surprise me that it starts to pause right after we've had that whole 3-month 10-year conversation. So corporate bonds are pushing back above this downsloping trend line for 2 years, so it looks like they want to accelerate to the upside. That just pretty much puts them in a trading range for the last 5 years. US 2-year, this is a chart that I keep staring at. Rolling over here, made lower lows. Start to see this in 2000, 2006, 2007 as it rolls over, and the RSI starts to drop in September. That was kind of when the RSI fell below 50. And over here, 2006, it didn't really break down till July of 2007. We're still above that level, so maybe we've got a little bit more time. But it looks pretty close to me, very fragile, and we'll just see what happens. And again, that's a monthly chart. Looking at the tips, the inflation protected, it continued to stay up there, nice and high. It really didn't change much this week, but again, gold in the end rolled over, so I'm kind of expecting this chart to do the same. Still looks like it's headed higher on the momentum curve. TLT, this one just a big push again, weekly, straight up. PPO is headed higher. Again, we saw this back in 2016, and it continued to go up. And remember, the stock market topped about here, or bottomed about here, and then started to rally. So this doesn't necessarily indicate timing for the stock market. Let's just put it that way on the TLT top out. BlackRock Muni Fund, I like to use that to help me with the 10-year, and it continues to point to higher highs. So it doesn't seem like the move on the bond yields is over yet on the big picture. Maybe for a few days you get a little wobble. The monthly, it broke back below the 20-month moving average, called that the center of the Bollinger Bands. You can see it was supported by that for the last couple of years. Now clearly not. 2014, we started to break down, rally up, and then break down again. We'll keep watching this, but from this very high level, it looks to me like this has got a lot of room to drop. On the 10-year, this chart's just continuing to drift lower. Relative strength-wise, we're at new 52-week lows. Prices at new 52-week lows. PPO is headed lower. This full stochastic on a big long time frame 80 period is breaking below 50. So this suggests to me that we're in a big bond price bull market, bond yield bear market. The 5-year bounced a little this week, or the last couple of days. Finally got a little bounce, but that doesn't give me any encouragement after this big trend line break here. So suggest we could just wobble before going lower. This big 2-year uptrend on the 2-year is pretty important. You can see in 2016 it held up, and mid-year had a real big drop, but it ended up being nothing to worry about, and off we went to the upside. But this long trend going back almost 6 years, with the exception of that one breakdown, I think is a pretty meaningful line. It was there in late 2014 as well. So just keep being aware of this one. We'll see what happens here, but that again is a 2-year daily, and we're deeply oversold. So again, who wouldn't be surprised that we get some sort of a bounce? No need to talk about yearly when we're only a quarter into it. This is the 2-year up close on a weekly, and you can see we've rolled over, broken the trend line, this big 2-year uptrend, rolling down, this kind of timely with the top of the market in the S&P 500. And I showed you that 2-year for the 2-year monthly chart, so that's also concerning, and this is also suggesting a bear market in bonds with a move down here to the 30 level. Big downhill ramp here on the momentum, so it doesn't say that the move is over. Okay, the 30-year, what we see here is this is starting to break to the upside on the PPO and the MACD, either one. Both of them are headed higher, and price is still moving higher. You can see that on this panel. Everything is still in up mode for the 30-year. And there is an important chart. I should just go get that. Let me think about where that might be. The USB yearly, no. USB 30-year spread. Let's just see if that's it. It's not. The one point I want to make on this, if I can find the chart quickly, is that as the 30-year and the 10-year get farther separated, it's not a bad place to look at for clues. And I just can't find the chart right now. My apologies. Maybe it's TYX. Let me just see if I can find it briefly. Sorry about that. No. Okay, so we're going to leave that. But the point I want to make on it is when the 10-year and the 30-year start to separate apart, that actually does coincide with some interesting times in the market. So I'm going to try and find that chart for you, and I'll post it in the article. Let's get out of the bonds. Oh, maybe that's it right there. Nope. Okay. Transportation, they actually had a good week, rallied up here. We're still under the 40-week moving average, or 200-day, and down sloping, lower highs, lower lows. And the real question would be, if we broke out above here, we'd have this nice head and shoulders basing structure and start to bounce up. We just made new relative strength lows this week. Doesn't feel like the environment for me to start making a move higher. But again, PPO trying to bottom near zero, and you can see during the uptrend, that's what we were doing. So this is an important inflection point for me to watch very, very closely. The airlines tried to bounce off this lower level. Again, not much money to be made in there, so make sure you're swing trading if you are. And they made new relative strength lows last week as well. Railroads tried to break out to a new high and then closed back pretty much at the prior high. 19.88, and we closed at 2331.17. So we closed higher than that, but you can see this big tail on the top here. But it looks to me like it wants to accelerate higher. And again, railroads are a good clue that everything is still going to keep going. And a bounce off zero is bullish. So watching that one very closely. If the railroads are going to start to accelerate again, obviously things are going to improve quickly. We've got a horizontal line here for the trucking. Momentum is still declining, but trying to turn up based on the last few days. Trying to bounce off this relative strength trend going back 18 months. I think if that starts to make lower lows, that would be a problem. And we saw it fall below the 200-day moving average shortly after the market breakdown. So we'll just see what happens at this 200-day. It's just slightly overhead here. So if it does get knocked back down. The auto chart, this is daily. You can see we're still making lower highs and lower lows. Here we're trying to make some higher highs or higher lows coming in, and momentum is starting to try and make higher lows. So perhaps there's something ready to go on here for a big enough bounce, and maybe it's just Tesla bouncing off its lows. But here's the downsloping momentum, and this goes back a year. If this is going to start to break out to higher highs, this is pretty bullish, and we saw this in 2016. Took almost all year to get into a positive territory. But I think if you got above zero on PPO momentum on a weekly chart for the auto sector, I think you want to pay attention to that. That would be bullish. Okay, broker dealers, this is a really tricky chart. Relative strength just broke to new one-year lows, and we're sitting here this week. We closed near the lows, but the downward momentum kind of paused, but we saw that 2 weeks ago as well, and then it just kept going. So watching it closely, if the PPO is rolling over below zero and actually crosses a signal line, that would be bearish. So again, if this bounces and goes higher, this is typically a very nice entry place. If this just fails right here, really big caution, because we're probably going to go down and make lower lows significantly. Usually as you get farther into the bear market, the drops are quicker and faster. Okay, utilities still continuing this giant uptrend and trying to hold this breakout. If we just zoom in on the last few years, what you'll see here is broke above this prior high and it just kind of stalled here. Still nothing wrong with that. Everything is good. We did get a new signal up here for a bull market in utilities. That wouldn't surprise us. You don't usually get new highs in a bear market. And the momentum trend is broken on the PPO here, accelerating higher. Industrial sector had a big bounce this week and held above the 40-week moving average. So this is nice to see. We still have lower highs. So double top, a lower high, and now we need to get above this one at least to suggest that we've got a higher low and then a higher high. Watch closely. This is an important one. And again, moving above this downsloping trend line in momentum is good. If it just stays here and rolls over just above zero, that would be a problem. So keep watching. This is, again, we only got $1 to worry about here, but if we can't get much more than that of a rally, I think I'd be concerned. Okay. One thing to point out here on the Australia and the versus the S&P, you can see that we're starting to make lower highs and lower lows here on the ratio. So that suggests to me commodity weakness, and Canada's even worse, where it spired up and then pulled down, lower high and now a lower low. So starting to look like a downtrend, and that could usually mean that either the S&P wants to accelerate or commodities in general are going to be too weak. The CRB made a higher low and a higher high and closed near the high of the bar for the month. That's a little bit bullish. On the weekly basis, we opened where we closed. We closed slightly lower than we did last week, and slightly lower than 2 weeks ago, and slightly lower than 6 weeks ago. So we're just watching very closely. We are above the 20-week moving average, and we have broken the downtrend. But again, if we're going to keep rolling over below zero, that would be a problem. So just keep watching this. There's a bit of an uptrend that we can judge here. Again, I'm expecting oil to roll over, as we'll get into right away. DBC had a rough Friday. It had a big push up on Thursday, gapped open on Friday, and then closed right at the low of the bar. PPO momentum is down. There were some highs that were higher here, so we've got negative divergence on the commodities. And again, a push below zero I think would be a problem. And you can see back in September, October, commodities were rising, and then as they started to fall, everything just kind of fell away. So when everything starts to make PPO moves below zero, I think that's probably a pretty good clue, especially on a daily chart. Here's your weekly for oil, and again pushed up to $60. Unfortunately, as you'll see in a few charts, the commodities aren't following that higher. Nat gas sitting right near the lows, so no real help there. Heating oil and gasoline, watch this one. This is interesting. Look at this downsloping trend line for gasoline. And again, it topped out right in September, October. If it was going to top out right here, right now, that might just tell us exactly what's going to go on. And then here is heating oil trying to stay above the 10-week moving average. If it can't do that, I'd want to be cautious. And again, it broke down right at the top of the market. Soybean and wheat, corn, everything had a terrible week. Corn broke this huge 2-year uptrend. I have trouble believing that with all of the issues in all of the flooding in the Midwest there. That's a big problem. And then you see soybeans breaking down here below the 10-week moving average. Wheat rolling over again this week, still trying to hold above this 2-year trend line, but It's only got a couple of hairs to go before it would be below. Gold rolled over below its 10-week moving average after failing to get back above. And silver looks like it's continuing its downtrend. I would actually avoid precious metals. So copper, trying to hold above this 285 high, but it's below this $3 low. So if you could tell me the direction, that would be great. Really an interesting one on this weekly chart. This looks to me like higher lows and higher highs, so I have trouble arguing with that. And even a three-wave correction in there, so maybe it's got lots of room to run. Could be indicative of the China starting to work better, all kinds of good things, but I just don't see it on the other charts. So anyway, I'm going to show you that in a sec. Here's livestock, pulled back after a big breakout. Sugar rolled over under the 10-week. Coffee rolled over under the 10-week. Cocoa, basically sideways consolidation for 6 months. And looking at cotton, just trying to rally back above, and it did break the downtrend here, which is nice to see. Looking at the medical marijuana ETF, this one has broken its relative strength uptrend. The scooter ranking has dropped below 75. That's been a pretty good sell signal last two times. I usually wouldn't want to wait this much. I think it's rolling over near zero on the PPO. The histograms are getting smaller here. Up near prior highs. I just think everything should be traded with caution in that area, because I think the liquidity will evaporate quickly. And here we have the coal ETF rolling over below the 10-week, but the steel ETF trying to bounce up, still sitting under horizontal resistance. So is the coal ETF. So let's not get too excited about either one of those until they start to make some moves. Lithium, big 15-month downtrend here, briefly broke above and then pulled back down, and is this week rallied up slightly. This is one chart that looks a little better, is the rare earth strategic metals. And let me just go get one chart here. Remix and lithium. And we're just going to go as a gallery view. And what I want to do on this chart here, just have to shrink this down a little bit. But here's your daily chart. And what you can see is, the rare earth metals continues to make higher lows and higher highs. The 50-day moving average was resistance. Now it appears like it's support. PPO, if it was to bounce off zero here, would be bullish. And lithium is testing this 3-month low here. So if it can hold that and start to bounce up, perhaps we get some price action here. On the weekly chart, you can see the downsloping momentum is about to break here. Any move to the upside would be bullish. And conversely, on Remix, we're already have broken this downtrend, and we don't really have a horizontal one to work with. So it looks like it's trying to make higher highs, and it's also trying to push back up above 80. So there's a lot of reasons to start to look at these two charts. They seem to be trying to break out. Lithium is still very much under the PPO bear market. And Remix is obviously way down here, but I would draw this trend line. That's probably what we're looking at on our charts as well. And a breakout of that would be quite significant. So anyway, both of those charts are worth watching on a closer basis. And it could be that they're just going to follow China higher. Okay. That is not the chart I was looking for. There we go. And so getting into the energy here, what we see is, just bounce that screen back larger. We've got a downsloping momentum here, and if it was going to roll over below zero, that would be bearish. Again, the fact that oil can't seem to get above, or can't seem to pull the other groups with it, that bothers me. On the precious metals, this is rolling over in terms of, this is the Goldman Sachs Commodity Index. And it looks like we're going to get a bearish cross on the PPO this week, so I would be cautious on the precious metals. Agriculture breaking down again here after trying to hold support going back 4 years. That just can't get much uglier. Looking at the livestock index, yeah, we already saw that. Nothing really new there. But here is the industrial metals. And now the question is, here's the 40-week moving average trying to break back above it, trying to bounce off this major support. It has broken the 15-month downtrend in momentum, but it's still below zero. So like this looks so bullish, and if it was going to start to break out, I think that, you just want to be on board with that. Until the RSI gets above 60, I think we have to be very cautious. So we're in the zone, whereas, if it did what it did back in 2015 and just rolled over right here, that would be the kind of thing we're worried about. So that's why I keep talking about everything seems on pins and needles. We're just at the place where no real clarity showing up. For the total commodity index, what we're seeing is right at the 40-week moving average, no sign one way or the other, still below the downtrend on the PPO. So if it was to roll over any time now, that would have been like, well, we should have seen that coming. So not happy with any of these. Baltic Dry Index didn't make any sort of a bounce this week, not suggesting global freight improving. XLE just continues to be mired. Again, oil pushed up to $60, but XLE didn't do anything. And the PPO is making lower lows and lower highs right now. Crack, the refining ETF, closed near the lows and below the 10-week moving average for the second time in the last 3 weeks. So this looks to me like it wants to roll down, not up. And it looks like it's going to roll over below zero, which usually means accelerated selling. Frac, staying in this tight range here on this weekly chart. We've got an uptrend on the lows and a horizontal top. If it was to break to the upside, you got to enjoy that as bullish, but we can't get the SCTR hasn't come off. It's still below 1, so it's the worst performing, one of the worst performing ETFs out there. And on Friday, even though we had a big bullish market, this tried to open higher and then came right back inside the range. So again, I'm more worried that the energy stocks are falling, not rising. Crude oil, just directly still below its 40-week moving average, down sloping, bounce up to it and fail. Who knew? That would be not exactly a new technical experience. Working on XOP. I'm sorry I'm rushing so much, but I want to try and get to the global chart, so I'm working a little hard here to finish off the commodities. XOP is just trading sideways for 3 months here. The rest of the market's been going up, so that, this is the move in oil, this is the move in the energy sector, so I would be cautious. Nat gas, nothing really going on there, so we're going to skip it. The uranium chart continues to look interesting, but hasn't broken out yet, just continues to hug this line. Again, Cameco closed supplies 18 months ago already, and still hasn't resulted in improved price action. One of these days, these charts will start to break out, but they haven't yet. Copper, let's quickly touch the direct charts here. You can see this horizontal support and resistance level tried to break out a few weeks ago. And then this week we made a lower high and a lower low, but closed near the top of the bar. And we got a big uptrend in momentum. We're right at zero. So if this was to roll over like it has done so many times during the downtrend, this is what we'd expect. We'd be coming off a high, come down, rally up, fail. This is exactly where we'd expect the PPO to fail. So caution on copper. Here is steel. And again, if it breaks out to the upside, that's so bullish, and that could be on the back of China starting to improve. PPO rolling over at zero on steel, no interest showing up on the buying side, and stuck at horizontal resistance. The full stochastic trying to get back above 80. If it failed right here, I'd be really cautious. Relative strength declining, so isn't pointing anything to me that suggests things are going to get better quickly. Gold, this huge outside bar last week, bearish outside bar doesn't look good, and the full stochastic is starting to roll over. Had lots of selling coming in, and the PPO looks like it wants to cross down. So I'd say gold is in a void until things start to settle out here. Friday it tried to bounce a little bit and hold up, but got a big downtrend here on momentum, rolling over right at zero. If it starts to go higher from here, I mean, I would definitely let that try to clear, because it was a pretty rough week. And a lot of the good gold stocks like Kirkland Lake and West Dome are not following gold higher, so that bothers me too. Here's the big base in gold, and again, if we were to get stuck here on the back trend of the uptrend, and roll back down, and you can see gold, much like copper, bing, 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 all of these places where the PPO rolls over just around zero. Don't really need to cover off GLD. We just covered off the others. But the ratio that I keep looking at failed this week. So it broke out and then failed. And hopefully you saw both blogs, one that said breakout and one that said failed breakout. So just be very cautious on gold until something happens to help us. And again, if commodities are going to drop lower, I would expect gold to follow it down. Silver, PPO rolling over right at zero, so it doesn't suggest getting bullish to me. Relative strength line trying to break out, just keeps teasing us, but it's still locked below the 50-day moving average and moving lower. This is lower highs and lower lows. That's the definition of a downtrend. So it doesn't look like we're going to get the break we wanted. Okay, lumber real quick. This chart's got some potential, and that is, so it's rolled over right under zero, so this could easily accelerate much lower. But watch this for a higher low, and the only reason I say that is if that was to happen, that's this kind of a wave right here, where you're getting up near zero, it rejects it, and then it starts to take off to the upside, and that would be bullish. Now, again, we had a lower low and a lower high and closed on the low, so it doesn't look like that to me at all. But again, up near zero, if you got a little corrective wave, then we could start looking at some of the lumber companies. Okay, no real time to go through all the car companies, but there's some interesting ones in there. I would just say Toyota Motors. The reason I looked at this one, look at this downtrend here, and it just keeps holding. Looks like it's going to roll over below zero, so that's very cautionary. If the yen was to fail, I would expect this chart to break higher. So again, higher low, rolling over right at zero. What if it starts to turn up from here? Then that's when you want to get on board. So just keep watching. If the yen is going to drop, you might see Toyota Motor take off. Tesla's bouncing off the lows, so that's pretty interesting trade. It was an outside bar, opened lower, tested lower, and closed higher and closed on the highs. That's a pretty bullish bar right there. Full stochastic trying to turn up, relative strength downtrend trying to break. So lots interesting on Tesla. I got to tell you, that chart works most people. Let's get into the world markets. So again, month end close on Friday, so good place to examine the monthly. We have the DAX closing, PPO is negative for the third month in a row, and Doji on the bar, so it came up, opened higher, tested lower, closed where we finished last month. It's up like fractionally on the month, but we're stuck in this sideways consolidation right here. If the German market rolls over here, I'm extremely uncomfortable, and the full stochastic is still, or sorry, the RSI is below 50 on a monthly chart. That's typically bearish. Here is the DAX weekly rolling over right at the 40-week moving average. And if you're going to get the PPO rolling over on the monthly and the weekly just below zero, that would be significant clue that we've got bigger problems ahead. And the full stochastic is trying to hold above this 80 level, but it's already given our cross here for a sell signal. Saw this back in May of 2018. Again, we're right at the 40-week. We had a bearish outside reversal at the 40-week, lower high, lower low, but again, closed near the top of the bar. So keeping us working, that's for sure. French market, much better, had a bigger push, got above the 20-month moving average, so that's pretty good. Still a bit of a downslope on top of the falling highs, and then PPO is still barely above zero, and we want to just watch and see which way that goes. Again, Germany's been the one to usually help us, but you know, we've had about 20 weeks of yellow vest protests in France, and look at this whole rally all the time. This week, lower highs and lower lows, but closed near the top of the bar, and we're right up against this downsloping trend line. So again, another important place on the chart. The RSI is at 60 in a bear market. Usually you stall there, so all of the signals are here for us to be watching astutely. The Dutch market, higher highs and higher lows, so that was bullish, opened and closed above the 20-month moving average, and the PPO histogram is improving, suggesting maybe there's a bounce there, but it is below the long-term trend line. Looking at the weekly chart, again, all of this comes in right where you might expect it at support and resistance levels, so we'll see which way this wants to go. RSI hasn't got above 60, so we still don't have any sort of buy signal to help us there. I put this one in this week. This is the Swedish stock index, and what I want to look at on this one, you can see the declining trend here. And again, if this rolls over right now, this would be no surprise. But what we had was a dip below 50, a rally up slightly above 50, so that's bullish. And then if it fails right here, we're right at all of this resistance. And the Swedish market somehow just, when I used to do daily charts and just keep track of the moving averages, this Swedish market was one of the first ones to roll over. So I put it on here just to try and give some clues, but a failed breakout last week, lower highs, lower lows, and a doji this week. So indecision, we're still stuck in this sideways 6-week range. You tell me which way it wants to break, but all I know is my histograms are starting to decline, so my momentum is weakening, but this 960, 970 level looks to be important. Okay, Shanghai, this is much better. It is pushing above 50, which is very good news. You can see that back here we did that all through 2009 to 14, then had a sudden surge. We're trying to break this big 3-year downtrend, so if that's going to happen, that's very bullish. And we got above the 20-month moving average for the first time in almost a year. Trying to break this downtrend in momentum, have not got a PPO cross yet. Maybe this month that could show up. And here's the, whoops. Let's just go back one here. Just want to shrink this down a little. Okay, so here's the Shanghai, and again, 4 weeks of consolidation right near this horizontal support and resistance. So we'll see it is very close to new 12-month relative strength highs, so that's bullish. The Hang Seng stuck right at horizontal resistance last month, closed just barely above it this month, higher highs and higher lows, so that's a push up. PPO trying to turn up, has not crossed its signal line yet, so this would be cautionary. If this just fails here, then that's what we'd expect, right? We have a lower low, a lower high, and then it would kind of drop down. So keep track, because if it can keep going here, this is very bullish and getting above the 20-month moving average. You can see it tried to do this back in 2016, and then it just went on a great run. So this is an important inflection point for both the Shanghai and the Hang Seng. This is the weekly, and again, declining histogram still doesn't mean it's over, but eventually that starts to take shape and pull the market down. And our RSI has not got above the level it needs to get into a new bull market. Okay, the Nikkei stuck below its 20-month moving average, so that's bearish. And the weekly, this chart is just continuing to work us, again, this big horizontal support and resistance level at 21,000, 6 weeks of sideways. Doji last week, a doji this week, and relative strength looks like it's rolling over near zero. So extreme caution should be applied when thinking about the Nikkei. Australia had a doji this month, basically opened where it closed and tested higher, couldn't hold it, closed within last month's bar, so no decision there. And on the weekly chart, looks like a head and shoulders topping structure. Again, we made new 5-week lows there, so it's have trouble calling that bullish, and we made our highs roughly 3 weeks ago. TSX, I've already discussed. Let's move along. Brazil is an interesting one, just as a commodity country. Got lots of negative divergence going on here, but this monthly chart could still work out just fine. It had a doji on the monthly, or a spinning top. And what we see here is new 3-month lows this month, and we tested below the 20-week or the center of the Bollinger Bands, closed near the top of the bar, but again, lower highs, lower lows after a failed breakout last week. So we broke out, then we tested higher, closed lower, so an outside reversal bar, closed on the low, and then this month made a lower low and a lower high, but closed near the high of the bar. Wave was below zero, so there's potential for this to be the final high. Okay, I fired through a lot there, but hopefully you caught it all. Everything is sitting there with a lower low and a lower high, but closed near the top of the bar, so we don't have an answer. But stay tuned next week. I think there's lots to shake out with Brexit and Japan. Thanks.